Next year won't be just a slowdown, it's going to feel much worse. We're talking about a sharp drop in the economy, but it'll come with a rapid bounce back. In the heat of the moment, though, it'll resemble a depression. The stock market could see an incredible decline, around 80% from its peak. To put that into perspective, if the S&P 500 hits 7,000, we might see it tumble all the way to 1,400. Now, while this is just an estimate, it's enough to paint a pretty clear picture of the road ahead. In today's video, we'll break down a shocking prediction that could completely change how we think about investing. David Hunter, a well-known macro strategist from Contrarian Macro Advisors, has issued a stark warning. An 80% stock market crash is on the horizon, and it's tied to a global economic disaster. But here's the catch. Hunter also sees a massive opportunity in this crisis, for those who know where to look. Let's unpack his alarming forecast, analyze the fallout it could trigger, and most importantly, explore which assets might be your best bet when everything else seems to be collapsing. Stick around, because this is crucial information for any serious investor. And if you want to keep getting updates like this, make sure to subscribe to the channel for more financial insights. Imagine this: a world where major governments are on the brink of collapse. Hunter predicts that sovereign debt, which many see as a safe investment, could become worthless. We might witness bankrupt governments worldwide, with some countries experiencing over 50% unemployment. Social safety nets like welfare, unemployment benefits, and even programs like Social Security could disappear, leaving people to fend for themselves. And this isn't just a US problem. It's going to be a global crisis. Now, how do we get from here to such a bleak scenario? Hunter fears that in times of such chaos, nations could fall into authoritarianism. But there's also the hope of a potential rebuild, starting with a more secure, gold-backed system. Of course, the path to that future is paved with extreme pain, but there's a lesson to be learned from the ashes. Flashback to early August, when the market suddenly tanked. Many investors were caught off guard. Hunter identifies key triggers for this sudden drop. One major factor was the reversal of the yen carry trade, a strategy that involves borrowing low-interest rate currencies to invest in higher-yielding ones. This shift caused shockwaves across global markets. And let's not forget the disappointing job numbers and the Federal Reserve's decision to delay interest rate cuts. All of this contributed to a sharp decline in major indices, including the S&P 500 and NASDAQ. The NASDAQ took a particularly hard hit, and for many, this marked the peak of the market. Despite a recovery, skepticism loomed over the market. According to Hunter, this doubt has built a wall of worry, where even bullish investors quickly turn bearish at the slightest hiccup. In this fear-driven atmosphere, Hunter sees a huge opportunity. As the Federal Reserve eventually cuts interest rates, which could happen as soon as the September meeting, he believes defensive investors will be forced to re-enter the market. There's a mountain of cash sitting on the sidelines, waiting to be deployed, and when the Fed starts easing its monetary policies, it could spark a buying spree that pushes the market to new heights. But don't get too comfortable just yet. Hunter's near-term optimism stands in stark contrast to his long-term outlook. He expects a severe economic crash by the end of this decade, one that could rival or even surpass the 2008 financial crisis. We're talking about unemployment potentially hitting double digits, widespread bank failures, and inflation soaring up to 25%. Speaking of inflation, Hunter warns that next year's global bust will be much worse than 2008, dragging us into a crisis that could take years to recover from. He predicts a devastating financial collapse by 2025, with inflation reaching heights that most of us have never seen in our lifetimes. According to Hunter, while U.S. banks may fare better than their international counterparts due to lessons learned from 2008, regions outside the U.S. will be in for a much rougher ride. Central banks worldwide will have no choice but to flood the system with liquidity to prevent a total economic freefall. We could see the Federal Reserve pump trillions of dollars into the economy, Hunter estimates up to $2 trillion. This will help stabilize the financial system, but it'll come at a cost. The flood of money is expected to fuel massive inflation, although we may not feel the full impact immediately. Hunter expects a lag of about 18 months before inflation kicks in, meaning deflation might actually come first as the economy adjusts. But by 2026 or 2027, inflation could skyrocket, possibly even surpassing 20%. As central banks rush to print money and issue new debt, the inevitable inflation will surge. This brings us to the question, where should investors focus their attention? Hunter believes commodities will be one of the few bright spots during this crisis. Commodities like oil and copper could see tremendous price increases as the decade progresses. For instance, oil could skyrocket to $500 a barrel by the end of the decade, and copper prices might surge dramatically. But the real standout in Hunter's forecast? Gold. Hunter predicts that gold, currently around $2,500, could explode to $20,000 by the end of the decade. Silver, too, could see similar gains, potentially reaching $500. These precious metals could serve as critical hedges against inflation, providing a safety net for investors looking to protect their wealth in the face of market volatility. And remember, if you're finding this breakdown useful, make sure to subscribe to Economic Hero and stay informed about the latest financial trends. We aim to keep you ahead of the curve with timely insights and investment strategies. The key takeaway here is that while gold and silver are poised to perform well, there will be significant volatility along the way. Commodities will experience sharp fluctuations, and the road ahead won't be easy. Hunter cautions that investors need to be prepared for massive swings in value, particularly during the next few years. However, for those with a long-term view, these assets could be the safest bets in a stormy market. To wrap this up, David Hunter's forecast is both alarming and eye-opening. An 80% market crash, followed by inflation levels we haven't seen in decades, paints a grim picture, but it also highlights potential investment opportunities for those willing to brave the storm. Commodities, precious metals, and even certain strategic investments could help you weather the financial chaos. As always, it's essential to do your own research and consult with financial experts before making any major moves. If you enjoyed this video and found it valuable, give us a thumbs up and don't forget to subscribe for more in-depth analysis on the latest financial trends. Thanks for watching, stay informed, and we'll see you in the next video.